It's Friday, November 12th. I'm Cristina Marujos, and you're watching the Daily Market Comment at xm.com by Mario Sajikiriakos. The trading week is coming to a close, with the dollar ruling the skies over the FX battleground after a shocking acceleration in U.S. inflation reignited expectations for faster Fed rate increases and served as jet fuel for the reserve currency. Markets are currently split on whether the FOMC will hike rates twice or 3 times next year. As such, next week's retail sales could be crucial in tipping the scales. Credit card data from JP Morgan Chase points to a solid October for spending, but an incredible November, as some consumers may have started holiday shopping early. Therefore, there might be more good news on the way for the dollar. In contrast, the euro is still grappling with several risks that threaten growth. The spike in energy prices is squeezing consumers. China's slowdown is bad news for demand in Europe's largest export market. And soaring COVID cases across the continent have just seen the Netherlands impose a partial lockdown. Germany might be next, as cases have skyrocketed lately. Taken together, these suggest the European Central Bank could disappoint market expectations for a minor rate increase next year, while there's still scope for a third Fed rate hike to be priced in, keeping the risks surrounding euro-dollar tilted to the downside. Wall Street didn't do much yesterday. Equity markets seem caught between opposing forces. Record low real yields, a frenzy in corporate buybacks, and fresh fiscal stimulus are colliding with fears over fading central bank liquidity, a slowdown in earnings next year, and weaker growth in China. It's a tough environment to navigate, and sky-high valuations don't make it any easier. The bottom line? The risk of a correction from such elevated levels is uncomfortably high, but any drawdown would be likely seen as a buying opportunity for many traders, as there's still no alternative to equities while real yields are so depressed. In the energy market, oil prices remain on the retreat. There's growing speculation that the White House could release the strategic petroleum reserves to cool oil prices and, by extension, inflation. Making a deal with Iran is another alternative. The Canadian dollar is feeling the heat of softer oil prices and the stronger US dollar, but admittedly, the nation's economy is just too strong to worry about a sustained downtrend. This was a Daily Market Comment here at xm.com. Have a great weekend.